Okay. Thank you very much for giving the opportunity to talk today in front of you. Uh, Basically, I'd like to talk today about the financing aspects of mini-grid actually. Before I start, I will have a quick run about our Frankfurt School in a collaborating center. I already spoke to many of you. For them who doesn't know about Frankfurt School in a collaborating center, it's basically a collaborating center between Frankfurt School of Finance and Management and UNEP. It is established a couple of years back. Basically, we deal with climate finance initiatives in the field of mitigation and adaptation sectors. So we basically provide advocacy, capacity building, training to various types of stakeholders involved in banks, development financial institutions, project developers. We have research, we have a lot of business leaders actually working and functioning here. We have research team as well as project design and implementation. So I basically work in mostly in the project design and implementation team actually. Here are some of the few examples of Frankfurt School UNEP Collaborating Center projects. I'll not run through all of this. It's basically TF funding facility created for the developing countries that create capacity building in the field of mitigation and adaptation services. The last one, hybrid power plant. This is one of the newest projects that we have right now with UNEP. So basically, I'll speak today about this project. So the hybrid power plants, this project, actually what we have heard in the morning from the Fed, we are actually looking at a very specific case of mini-grid. We are looking at brownfield projects, that is the diesel grid already exists, and we are looking at hybridization of this existing grid with a certain share of renewable energy. So we are basically looking at PV, photovoltaic. So what we have done, we have selected and identified 7 sites across Asia, Latin America, and Africa. Our scope of the study involves that we need to do a proper techno-economic and financial viability of the selected sites. I'll not mention specifically the sites that we have identified because it is still under assessment, and a lot of financial numbers and figures that I'll put, I don't want to confuse others because it might change. So I would only show the facts that come out of this study. So basically, we're trying to focus on to find out the impact both on economic point of view and financial point of view. So when I say from economic point of view, it means we are trying to see the macroeconomic perspective, like whether we can include the carbon cost of emissions. And financial viability, we're trying to look at from the project perspective, from the commercial lender's point of view. This is just an example, like how the different types and size of project needs different kinds of financing actually. So I actually put here hybrid mini-grid in a range of 50 to $1 million US. So maybe we can debate about it, but I mean, what I wanted to point here that probably projects which are below 1 billion are more applicable for balance sheet financing, and projects which exceeds more than 1 million, I think there are more chance to have project finance approach. And Different types of technologies also have different financing challenges, actually. When you compare with the hybrid mini-grids, with other PV technologies, PV products, you see that the challenges of the technologies are different. The financing challenges of the technologies are different, actually. Hybrid mini-grid, for instance, there's a perceived risk of new technology. There are a lot of innovation has been going on, especially in integration with the grid. A lot of products are coming up in the market. So there is already a perceived risk of new technology among the investors about this product. For instance, hybrid mini-grids also would need long-term financing, actually, which is not easily available. You also need to create an economic justifications to have hybridization of your existing diesel grid. Otherwise, what you would replace the existing diesel plant. Opportunity costs, whether the baseline you have, the diesel, are most cost effective or the hybrid one. Here I give a very real example of one of our projects, one of the sites. So basically what we did, we collected the load profile in 30 minutes interval for the whole year, and we analyzed it through a simulation software like Homer. What you can see here that the load profile is more like, I would say, a mix of residential and maybe semi-commercial, because you see that the peak goes in the evening and stays low during the sun hours. So if having this load curve of the site, if you now put a PV, how it will look? Not to forget that the size that we are looking at is a quite a diverse range, actually. We are looking at from 100 kilowatt to 5 megawatt, actually. We deliberately chosen this range because we want to have different results coming out of our techno-economic and financial analysis. So this particular site is about have a 3 megawatt diesel plant exists, 3.5 almost, and we try to see if we have a 3 megawatt PV in place with this site, how the energy share would look like. Given the site irradiance, I think it was about 5.3 kilowatt hour per meter square per day, we'll get this kind of energy yield annually from this site, which results almost 30 to 35% of your total energy can be made through PV. What we also considered here, there are different technologies exist, actually. For instance, we are now considering here 100% PV peak penetration. That means, depending on the current demand, whatever the PV produces will be fed into this isolated grid. And if the demand is as such that the PV can meet the complete demand, then the diesel generators will be turned off. So that's how we try to maximize the PV fraction, because we are looking at a different size, actually. We are looking at larger size. So why we have to increase the fraction of PV, that will understand when I'll go to the financials numbers. Here I try to tell you about the methodology that we try to use to calculate the LCOE for the hybrid system. It is not as simple that we thought initially, actually, because we cannot think of it separately. You cannot think of it as a 100% diesel and 100% PV. We plug them together, now hybrid. It's not that simple because you have to think about they have a certain ratio of in their energy mix. You have to consider that. Having said that, for instance, not all the PV energy you can utilize because it is demand specific. So you have to deduct those energy that coming out of the PV which are underutilized. When the diesel generator and the hybrid system run, your fuel consumption reduces, but that not necessarily mean that your specific fuel consumption will also reduce. It will go high a bit. So we consider all these things and put that here in this yellow color in the integration cost of the system. On top of that, we have extra investments from your control system and other integration costs. Hybrid system and investment opportunity. I put a question mark here because it's not to say that that the viability of hybrid power plants is in question, but it is rather the things that one needs to consider before they make a decision on hybrid power plants. For instance, ownership of generation assets. Can we think of separately and brownfield existing plant which will have different owners of hybrid, different owners from PV and diesel? Probably not. Load demand, also very crucial. You want your plant to run at a very high load factor so that you maximize your sun hours and increase the solar fraction. This is a very good example of how the LCOE would look like. I took one of our current projects that we are doing. You see that the elements of the LCOE, there is OPEX, fuel, and CAPEX for diesel and hybrid. You see the fuel shares goes down in case of hybrid, and CAPEX increases because PV has the system integration. We have certainly system integration costs. So if you look at these figures, you'll see the difference between two types is more than 20%, quite acceptable. But once you add the capital cost, the cost of equity and debt, you see that it's very tricky. You see that the hybrid solution can tend to offset the LCO benefits. So what is the crucial issue here? I mean, definitely we try to analyze that, is the weighted average cost of capital. So what we try to do, we try to analyze on different financing costs, how the LCO will develop. And you see that there's a break-even we found for a particular case. It's a very case specific that at almost 11%. That means if you consider about 70% debt and 30% of equity, for the equity investor that would imply 15% and debt, I guess, is 8%. So basically what really determines what types of financing will be suitable to attract investment for this kind of project. Similarly, diesel price, also very crucial. I mean, we tried to analyze 6 different cases. I mean, what was very interesting that the EIA projected that in the next 5 or 6 years, the diesel price will go down and then it will increase further. So diesel price definitely a very crucial point to make the case of hybridization. The better, the higher it is, the more stronger you can make a hybridization case. Not only that, you also need to know about the size and the radiation of the site. If you consider a same size plant for say 3 megawatt, if you put them under two different locations that have a difference of solar radiance, you'll see that the plant which is located in a place which has higher radiation, you can have much better LCU benefits, can be in the range of 5 to 10% even. And this is the last slide with regard to financial viability. Now we know about the LCUE. We determine the LCUE of different cases, hybrid and diesel. But to make it financially viable, we believe that existing PP and FEED schemes does not really cater to the needs of hybrid systems. Feed-in tariff on an average 25 cents. Does it really make sense for hybrid cases? Our understanding is no. So what we have to do, we have to probably use avoided cost, or if you can say feed-in tariff top-up or incremental cost of renewable energy to be a benchmark for setting a tariff for hybrid system so it can attract private investors. These are some of the points. I mean, one should not take it as very conclusive, but these are the points that we're right now discussing. Our understanding so far that is DFI financing is needed really for a hybridization project, and that will enhance the attractiveness of the project. In case of brownfield sites, it's very true that most of these sites that we have looked into are mostly owned by the public utilities. So now, if you also need the private investors to invest in these large scale of projects, you really need to amend some of the existing laws, IPP laws. Otherwise, they will not feel attractive. And that's what we're doing right now. We are talking with all the utilities who own these plants to know about how we can go further with them or involve IPP into these projects. I think there it ends for today. Thank you, Hirak.